Thanks for joining, everybody. Welcome to the second part of my four-part free tax seminar. I usually do this twice a year on site in Arizona at the festival, and also I recently added doing it again in Louisiana at the end of the year as well. Obviously, we have not been able to do that, hence the moving to the Zooming. So thanks for joining us here. I want to thank Faire for hosting this. They do a fabulous job on everything. If you haven't liked their Facebook page, they have all kinds of events and things that are awesome in our community, but RCF and Faire have teamed up to do a number of projects. So this is being made possible by Faire and RCF and the advocacy program. And so thanks for all of that. Just a reminder for Zoom protocol, etiquette kind of stuff. Make sure that you're muted. You should see your microphone with a little slash through it. That's how you know you're muted. You can leave your video on or off, whatever you prefer, doesn't matter. If you have a question, if you look down where kind of near where your mute button is and all that sort of thing, there's a reactions button. And if you click the reactions, you can like laugh and smile and things. There's not like a vomit emoji, so if you hate what I'm saying, you can't use that one. But you can raise your hand if you have a question. So if you want to do that, go ahead and do that. There's also a little chat window, so you can also put it in the chat. I'm going to be answering questions before I move on with a topic. And so you can raise your hand if you want to ask me something about what we've just said or whatever. You can type it into the chat, and then before we change topics, I'll actually read back through the chat and kind of answer those questions. Try and keep the questions on topic because we may be dealing with your topic coming up in the future. And then at the end, I'll ask for any questions that I didn't cover or that you want clarifications on. So there'll be lots of time for Q&A. So feel free to do that. And if you have phoned in and you don't have these options, just wait for me to take breath and then feel free to chime in. I can see a lot of your videos, but not all your videos. So I keep kind of like going back and forth, but I'll be looking at that in order to make sure we see that like hands are raised, or, you know, if you have your video on and you've literally got your hand raised, that's fine too. And so just familiarize yourself with all of that kind of stuff on Zoom. I want to also remind you, I'm going to put a slide up with my contact information right now. Most of you know me and we're friends on Facebook. You can always PM me on Facebook, but my phone number for texting and my email address are going to come up on the screen here in a second. If you feel like your question is hypersensitive, that you don't really want to ask it on a Zoom call for all the world to see, or maybe it's real specific and you just don't want to take up the time, whatever, you can always contact me after the fact for all of that. And I'm just realizing, Andrew, I don't know if I gave you the contact slide. I'm going to go see real quick if I can pull this up and share it with the crowd. Share screen. Share. Let's see. Ha-ha! Did I do it? Can you see it? Yay. Okay. Facebook PM is always the fastest way to get me. I'm not a morning person. I'm in Arizona. So if you get a message from me, it's going to be late in the day. So just know that. But you can always reach me at any of these different things. If you email me, note that middle initial S in the middle. People forget that a lot. I don't know who has brandywatson@gmail. I don't think it's anybody, but they get some probably weird emails sometimes. Okay, so moving into a little bit about me. Again, I think most of you know me, but just a quick rundown. I've been on the road full-time for 23 years. I've managed uncommon adornments for all of those 23 years. And in the last handful of years, we started a new business, Celtic Leatherworks. I'm a co-owner of that. I am also the founder and president of RCF, the Renaissance Catastrophic Emergency Assistance Foundation. So I have got that as well. I'm just seeing people that need to be admitted. Hold on, letting them in. Okay. Multitasking. And I have also, almost the whole time I've been on the road, I've been a registered tax preparer. I started doing it just for personal friends and family and stuff like that. And it's just kind of moved into a tax business I didn't really see coming. But I started doing these seminars kind of as a way to inform the community, and it's definitely turned into a business I didn't really expect. But it's cool. It's something that I find fun. I know most people are just like, oh my God, but that's my kind of geekery. Last year I did about 200 tax returns, mostly within our community. I basically do any sort of tax returns except for corporate taxes. I usually turn over to somebody else. But I am registered with the IRS and I have a P10, so you can always look me up as well. The reason why I do this and do these seminars is really because I want to kind of try to demystify taxes. You know, taxes are scary to almost everybody. And I think that knowledge is power. So the way to take away the fear is to have the knowledge base behind things. And I think that's really important. And I want to make sure that people in our community are doing things the right way and getting on track with their taxes. I think that that has started to become a little more prevalent in recent years, at least than when I started doing this and like everybody was cash under the table and a lot of people didn't do tax returns and stuff like that. So I think as a whole, we are beginning to demystify taxes. So that's the main reason why I do this sort of thing. So now I'm going to ask just a little bit about you guys. There's going to be a couple of polls that are going to show up on your screen real quick. It's just going to ask you just some basic information about who you are and what you do at the festival, so I kind of know who the audience is and can kind of tailor some of my contacts more toward who's here. So the first poll is going to come up on your screen in here in just a second. You should be able to click and answer this poll and submit your answers. So the first one just is, what are you? Are you a business owner? Are you a worker who gets cash or 1099s? Are you an employee, which means you get W-2s? Or are you all of the above? So if you guys will go ahead and answer that. It's all anonymous. We're just going to see how many people and what percentage each of you are. So this is just kind of a general poll. We're going to leave this open for just a few more seconds. I see more votes still coming in. Looks like we got 10, 11, 12, 13. If you're on a phone, you obviously can't do this, so just bear with us a second. All right. So we're going to go ahead and close this poll in 5, 4, 3, 2, 1, ending polling. All right, so taking a look at these, we can see that we've got 6 people, 43% who are business owners. We've got 1 person out there who gets cash or 1099s as a worker. We've got 2 W-2 employees and 5 people who are all of the above. That's about the same share of percentage that we had on the last call, which was the new tax updates. So that's pretty cool. Good to know. The next one that we're going to do real quick. Here comes the next poll. This is the last poll. It tells me just a little bit about why you're here and what you're hoping to get out of this seminar. So here's poll number 2, if you'll go ahead and do that. So why are you here? Are you here to learn how to do your own taxes, to better organize for your tax preparer, overall tax knowledge? Click all the ones that apply to you. So if they all apply to you, click away. You're new to your tax situation and you don't know what to do. You've never done taxes before, or you're way behind on taxes, or you're just trying to be not so terrified of taxes in general. So go ahead and click all the ones that apply to you. We'll leave this open for a handful more seconds here while everybody's getting their poll questions in. All right. Looks like everybody is here for overall tax knowledge, so that's exciting. As somebody said on our last Zoom, this is a room full of Ravenclaws, soaking up all that knowledge. So that's awesome. All right, we're going to close the poll in 5 seconds. Then we'll take a look at these results and closing. All right, so got 5 people out there, 33%, who want to learn how to do their own taxes. 8 people out there better organized for their tax preparer. Almost everybody wants overall tax knowledge. New to a situation, 2 people. Never done taxes before is nobody. Good job, guys. Way behind, trying to get caught up, check mark. Trying not to be scared of taxes, 7 people. Awesome. Okay, very cool. We're gonna move on past that then. Thank you so much. So if we're gonna put up a slide of what we're gonna talk about today. This particular part 2 of the series is for people who are self-employed, independent contractors, cash earners. That's everybody. You're all small business owners. So that basically entails everyone in here. For the most part, you should see Perfect. All right. So we're going to talk a little bit about when and why you should file, what to do if you're behind on years. We're going to talk about being on unemployment while also earning income and possibly getting business loans and grants. That's like the story of our 2020, right? Basics of tracking income and expenses, getting a better system together. We're going to talk about all the expenses we can write off. We're going to talk about travel and vehicle expenses, the always hot topic of mileage versus actual expenses, which I'm very opinionated on. So we'll talk about that a little bit. Depreciation, handling assets during a pandemic, which everybody's been asking me about. Cash versus W-2 versus 1099, all kinds of different things like that. And later on, we're going to get into state income taxes versus state sales tax, which I know is always super fun topic and probably pretty confusing for a lot of people. So hopefully we're going to work through that too. All right, so we're going to get out of there. And does anybody have any questions or anything before I get started in rolling out all of the dump truck of information for you? Okay, don't forget there's a chat in there, and there's also, okay, perfect. You can also raise your hand and chime in if you have a question. And physically raise your hand if your video's on, that's fine too. Okay, so first of all, it's obviously no joke that our lifestyle leads to a complicated tax situation. I've seen H&R Block people and stuff like that charge a gamer who makes $8,000 a year, $500 for tax return, because that person had income from 3 different employers in 5 different states. It's ridiculous, and morally, it, you know, bothers me to no end. So I really like to make sure that people have all of the information possible to give whoever is doing their taxes to make their lives easier so they don't get charged as much. And or a lot of people do come to these seminars to learn how to do them themselves. I used TurboTax for ages to do all this, and I still wholly support TurboTax's program to do your taxes yourself. So I think that's all very easy for people to be able to do if you're so inclined. I always say we all kind of have our thing. Like, I love to do taxes. It's like a fun puzzle to me. Most people think that's ridiculous, but we all have our thing. Like, I could change the oil on my truck, but I'm not going to. I'm going to pay somebody to do that. So, so we all kind of have our thing, you know? And so this is really just kind of about learning what your thing is. And some people whose taxes I do, you know, I do their taxes for 1 or 2 years. They kind of get a handle on how things work in our kind of tax situation, and then they take over doing their taxes themselves. And that's totally cool. I give people, you know, tax tips all the time, and when they're doing their own on TurboTax all the time, they'll ask, what the hell with this screen, and where does this go? And that's totally fine. Yeah, Elise is bringing up in here, hey Elise, I didn't see you come in. Elise is bringing up in here that TurboTax home and business costs more than filing, for filing in 4 states than I charged her. I do her taxes, yes. That when you do a lot of states, those states really start adding up 40, 50 bucks a pop in most of these tax programs. So I ended up switching over into a bigger software program is stupid expensive, but I probably do 40 states a year for all the tax clients. So, you know, it's just worth it. But the state taxes, I think, are probably some of the most confusing because every state plays by their own rules. None of them are the same. I know people, I used to do the state taxes by hand myself all the time. I know people who are still doing it this way. It makes me just like want to vomit to think of state taxes by hand these days. Carrie, I use Drake. Okay, Carrie was asking what software I use. So the very first thing that we need to talk about is why you should file. You know, there's a whole lot of varying different ideas and theories, I guess you'll call them, on why you should file. And if you should file, it's the law. It's the bottom line. Debate it all you want, but it's the law. We need to do it. Technically, under the new tax laws, a single person who's under 65 is only required to file wages over the federal standard deduction of $12,400. That would be for W-2 employees, but if you're self-employed, you do have to do a tax return for anything over $400 in earned income. This is a real big misunderstanding specifically in our community. I hear people all the time say, I make less than the standard deduction, and so I don't have to file. Nope. That's for a W-2. You don't have to because they've already taken out your taxes. So they're going to keep them. If you want your refund, sure, go get it. But that's why you don't have to, because they've already taken the money. If you don't file your taxes as a self-employed person, someone gets 1099, someone who gets cash, over $400, and you have to file. That is super important. That is also the way that we all pay into the system. So when you get a W-2, you have FICA, you have your Medicare, your Social Security, your federal and state taxes are all taken out of your paycheck every week. That also pays for things like Social Security and disability. When you're self-employed, you file your taxes on a Schedule C. That's where you file all your income and your expenses, and then you get assessed self-employment tax. That's the majority of what we pay is self-employment tax. That self-employment tax is all that FICA stuff that comes out of everybody else's W-2s. So the way that you pay into the system is through your Schedule C, through filing your taxes. The other thing that I think is super important for people to understand, and in my time heading up the advocacy program for rescue for all these years, we learned this the hard way. And that is, if you're not paying into the system, if you're not doing your tax returns, if you're not paying your self-employment tax as a self-employed person, you are also not paying into the disability and Social Security system. Now, when we get closer to retirement age, and I mean, I've been hearing this for generations, 2 generations now, I've been saying by the time I retire, Social Security won't be there. Well, guess what? It's still there, guys. So we do have to think about it. Social Security is based on the last 7 years of your income averaged. So if you're not filing a tax return, you're not going to get Social Security because you don't exist on paper. That's really important, especially as you get closer to that 60 age. The other side of things is, and this is what I was talking about with being a patient advocate, you can be 25 years old, nowhere near needing to think about retirement, but you get in a car accident tomorrow and they deem you disabled, you do not get disability, and therefore you do not get Medicare insurance now that you're disabled if you have not been filing a tax return and filing a Schedule SE and paying into the system. These are not entitlements, no matter how many times people want to say that. This is what you pay into the system. This sets you up for, this is insurance for your retirement. This, you know, a lot of us out here don't have 401ks, don't have investments. Your Social Security is your retirement. The other side of things that I try and plead with people all the time, especially our entertainer friends, don't hide your cash. Please don't say that you only take credit cards at a show. For the love of God, everybody knows you you take cash. Like, you're not turning down someone's cash. So please don't hide your cash, because that's literally shorting yourself should anything happen and you need Social Security because you become disabled suddenly, or you get into retirement and therefore you need this Social Security. You're literally shooting yourself in the foot by hiding your cash income. So don't do that. We all have a ton of expenses. Traveling for a living is not cheap to do what we do for a living. So maximize your expenses, keep your receipts. We're going to talk about all that through this, but if you can write off all the expenses that you're allowed, you can report all your income safely and feel okay with it, because it's going to offset and you're not going to owe, $10,000. Like, everybody has all this irrational fear of owing a crap ton of money. You're just not gonna. We have a ton of expenses. It's going to be fine. But those are, some of the reasons why it's really important to file. I think the most important thing we've learned in 2020 is having proof of income is very important all of a sudden. I probably did 100 tax returns in 2019, and the moment this whole stimulus and unemployment was tied to a tax return, I did 200 tax returns in 2020. So that's everybody freaking out who are behind on their taxes, have never done taxes, whatever. Maybe they're just 2 years behind and they didn't do 2018 and now they're screwed and not getting this stimulus and blah, blah, blah. Proof of income has become very important in 2020. Before then it was your typical, I want to buy a car, I want to get a house, all those sort of things that you need proof of income for. But if you don't get W-2s or 1099s, filing your tax return is your only way to get proof of income. So it is important to stay up on it. And I will say that going forward, as this pandemic is not over and continues on, we've got all kinds of new rules and laws for the 2020 taxes that are pandemic reasons. This new bill that's going to come up soon is inevitably going to add more tax provisions and changes for 2021. So this is ongoing. The credits are going to be ongoing, and every single thing that they give us as assistance is going to be tied to a tax return, even going forward. So it's going to continue to be very important that everybody files. The next thing that I want to talk about is the risks. Obviously, if you don't file, you get to be in constant communication with the IRS, which is always fun. I find that the states are even more bulldogish sometimes than the IRS, so they may also come a knocking, and that's super fun too. If the IRS and the states do find you and need a tax year that you didn't do, they give you time to do it. There could be late filing penalties, especially if you owe a lot of money and stuff like that. So there's certainly a risk to not doing it in a timely fashion. But if you do need to go and get caught up, that's always an option. And a lot of times you'll see, like right now, where there's all kinds of credits and things that may actually give you a refund or keep you from owing so much anyway. There's no fines associated with a refund. So if you're going to get a refund, I have people that come in all the time. They have W-2s and they've had taxes withheld and they're owed like $2,000 and they just sat on it for like 3 years. And it's like, dude, all this money, you're unemployed right now. You could have used that, you know? So it's kind of a little crazy. If you haven't filed in forever, you know, you've got time. It's all right. I've been trying to let everybody know, especially those who are behind or have never filed. 2020 is like the best year to get started. We all have low income. We all have probably lower expenses than ever. If you've had an established business with assets, with a vehicle, with booths, with things that are assets that are depreciating in your business is likely in a negative this year with all the credits, and especially if you had income withheld on your 1099 for your unemployment, like good girls and boys, then you'll likely get a hefty refund. And so that's kind of nice. It's a good year to get on the books, and it's a really good idea just to make that happen. Yes, Elise is saying, make sure you save all your paperwork. She's been audited by the IRS and New York. They keep looking for people who don't have records, so make sure that you keep your receipts and all that sort of stuff. We're going to talk a little bit about that later, but I always say I've been audited multiple times, and I'll send in like 187 pages of front and back photocopied receipts and stuff, and they're just like, stop, you're fine, go away, you know? So as long as you have the documentation, you know, everything's fine, but you got to keep that documentation. We're going to talk a little bit later about some systems on how to do that too. Does anybody have any questions on anything that I've covered already before I skip on? I'm looking through. Yay. Oh, Elise, I see your face. Yay, it's been a long time. All right. Some days I don't want to be on this video thing, but it's real nice to see your faces anyway. Okay, so I'm going to run through like some tax basics. And if you need me to stop, rewind, talk slower, repeat something in a different way, because that way didn't make sense, put your hand up, interrupt me. When I'm reading what I'm telling you guys, I'm off screen. So sometimes I can't see you. If I'm not seeing you, just jump in and interrupt me, okay? So most of us have at least a business, 2 businesses, 3 businesses. That's not unusual in our community. When I talk about businesses or self-employed, I'm talking about booth owners, but I'm also talking about people who are paid cash, 1099s, you're all business owners. Independent contractors, business owners. Almost all of us are going to be what's referred to as pass-through entities. So essentially you do your business on a Schedule C, unless you're an S Corp or C Corp or something like that. But you would do your business on your business income and expenses on a Schedule C. And then that net income after all your expenses passes through your Schedule C onto your personal 1040. So that's what a pass-through entity means. When they changed a lot of the laws in 2018, they did a lot of new stuff for pass-through entities. So that is a term that you'll hear a lot. So do remember that term. And if you're receiving, there's been a little bit of changes on 1099s. If you're receiving 1099s versus W-2s. We used to report independent contractor income on a 1099 miscellaneous. For 2020, they changed that. They've taken out the box 7, where we've always reported non-employee compensation on the 1099 miscellaneous, and they've made it, it's a form unto itself. The form has existed before, but now it's the form where you report non-employee compensation as an NEC. That is what you're going to give an independent contractor, or what you're going to get from someone you do work for if you earn $600 or more in a calendar year. There are no taxes withheld from this, and this is going to be your self-employment. I want to stress to everybody, we talked about this a little bit last week, and in my opinion, and in the opinion of people who do this for a living, them isolating that kind of income out to a 1099 NEC is because there's going to be further crackdown on people issuing 1099s when they should be issuing W-2s. If you have followed the news at all, you will see that some states, like the state of California, have been cracking down. There's just a big lawsuit with Uber in California. They think that Uber should be issuing W-2s to their drivers, withholding taxes. That comes with workers' comp and payroll and all kinds of things like that. So there are some changes that are happening on the state level, and I suspect this is going to become more widespread. It could become a federal thing. Next week is the week that we're talking specifically to business owners. And next week, we're going to go through step by step of how you can identify if you should be issuing a 1099 or a W-2. So we're going to push that off to next week a little bit more and differentiate that a little bit further. But as a basic rule, when I first started doing this for people out on the road, like nobody issued anything. So my whole thing was to at least get people to issue a 1099. You don't have to do payroll, you don't have to do workers' comp, you don't have to do the thing, just please give your people a form, okay? In 2020, we have now seen that form become very important. If people didn't do a tax return, but they had a 1099 or a couple 1099s, it got them unemployment. It's proof of income if they needed to go get an apartment because there's no road. So issuing at least a 1099 to your people has become more of a compassionate decision, in my opinion, in this past year. So I like to encourage everybody to at least do a 1099. I only charge people $10 a person to issue and file a 1099. Most people think that I'm ridiculous for charging that little, but I want everybody to do it and to at least do it right. The penalties and fees for not filing a 1099 or W-2 are ridiculous. There are late penalties per person, and then the maximum failure to file is $550 per person if you don't issue them a 1099 and they earned over $600 in a calendar year from you. There's also no maximum. So if you have 100 people who work for you, it's $550 times 100. So, I mean, it's a risky thing not to issue that. And on the flip side, if you're someone who gets paid cash and you would like a 1099 for documentation for your income, let your person know who you do this work for that you would really like that, because there are so many booth owners that I talk to, business owners I talk to, who are like, my people don't want 1099s. They're scared to death. They don't do their taxes. They want to be off the radar. Well, nobody's off the radar anymore. That's just not even a thing. If you're on unemployment, like, you're on the record. So you just if you want to get it, let these people know that you want to get it. And if they're terrified or they don't know how to do it, give them my contact info and I'll walk them through it. It's really simple. You can also print them and do it by hand and get them from Office Max or Staples. So it's not that hard. A W-2 on the flip side is what you're going to get from an employer when you're technically an employee. Taxes are going to be withheld. You'll be paying into Social Security and Medicare, as we talked about before. And you're going to be entitled to things like workers' comp and being on payroll and things like that. Through my company, through Uncommon Adornments, I am a W-2 employee. So one of the perks to that was I got unemployment before all of you guys did. Because I get a W-2, it was real easy for them to call up my employer and say, hey, are you closed due to the pandemic? And they say, yeah. And I think I was getting my unemployment by the beginning of April. That's another real nice perk about being a W-2 employee. Yeah, Deborah and Henning are saying, I've had to insist for my bosses and have mostly been the first to do so, to ask for a 1099 to be issued for you. Yeah. And I tell people all the time, and this is the thing too, like if you get cash, you're still required to claim that cash on your income, but it's so much easier if you have a 1099, and the risk to the employer in not issuing is stupid. And it's $10 per person. So like, why risk that? But I'm glad that you did insist on that. Hopefully that starts a trend with those employers to make sure that they're doing that too. So that would be my hope. So again, if you don't get a 1099, you are legally required to claim all your income. We talked about not hiding your cash income and stuff like that. I understand people's desire to do that, but there's so many reasons not to. So many things that benefit you from actually claiming them all, not to mention, as we've seen in 2020, the more income you can prove, the higher amount of money you get paid per week, right? So as a self-employed person, I bet you a whole lot of you people are getting the minimum that the state will give per week for unemployment. A lot of the states said, if you want to give us your proof of income, we'll determine if you can make more than this minimum. But it kind of got a lot of people kind of in a crappy situation in the very beginning because they weren't getting as much as they should be getting. And there's actually a new thing that was passed in the law on December 27th, which is kind of cool. I don't think this has happened yet in any state, but on December 27th, in that bill that passed, they passed something called the mixed income earners part of the bill. And I've lost my sense of whatever that word's called. But basically what they've said is, because so many people get money on a W-2, on a 1099, own their own businesses, that unemployment didn't assess all of that together. And therefore, a lot of people were given less per week than they should have been on their unemployment. So what they've decided is that anybody who can prove in 2019 that they got W-2s, 1099s, self-employment, whatever, are supposed to be able to get an extra $100 per week on their unemployment from the state. That is in the bill. That has been passed. All of the states, it's going to be an automatic thing. The states are probably going to make us send in the proof of all those kind of things, send in our tax returns if we haven't already. Some of the states are going to ask for it again for the third time. But that's the thing that is coming. That's my tax return. I get W-2s, 1099s, and own my own business. So I'm looking forward to an extra $100. That'll be fun. I think it backdates all the way to the beginning of January of 2021. So back to the December 27th bill, which isn't all the way back to the beginning, but depending on how quickly they get their butts in gear, that'll be a nice lump sum once it finally happens. So that will be kind of nice. Just going through and making sure nobody's got their hands up. Okay. A lot of people, like people who want to claim their cash, when I'm trying to talk to people about claiming their cash, people oftentimes get a little nervous that they're going to get their employer in trouble because they've given them cash when they should have given them a 1099. I want to just let you guys know that I can see your questions. I'm going to come back around to you. One second, Deborah and Laura. I want you guys to know that when you claim cash income, it goes into a field that literally says general income. There's literally nowhere to type in who paid you for that income. Again, if that business gets audited, yeah, they're going to get in trouble for that, but there's no way for you to get them in trouble for claiming your cash, okay? So that's really important for you guys to know. Laura is asking me, the extra 100 is automatic. You're talking about for the mixed earners. Yes, it is supposed to be automatic. Now, we have seen this whole time that the states will handle things how they damn well please, and no two are going to handle it the same. So you could get a little questionnaire, you could get an email asking you to prove that you qualify for it by uploading W-2s and 1099s or your tax return, whatevs. So be on the lookout for that. I don't know any state who has started paying that yet or even started telling people about it, but if you go to your, I know I'm an Arizona resident. If you go to the website for DES, there is information on most of the state's websites about it, but it's kind of one of those, we're not there yet, please wait, kind of things. So it's coming. Do we know when? No. Laura, we know your state likes to do things as slow as humanly possible, so you're probably going to get it after everyone else. Laura's in Kansas, sorry. But yes, it supposedly is coming, and that's another one of those things that I would really love for everybody to keep me posted on, as we're kind of collecting data through the community to let me know when you're starting to see that and what they're asking for it. So keep me posted on that. Deborah, your hand's up.
I was just wanting to get a repetition of the term mixed earners.
It is mixed income earners. Mixed income earners.
Thank you.
And that was in the December 27th bill, which is the Consolidated Act. I took that out of the piece of paper in front of me. The Consolidated blah 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 Act. It doesn't make any sense. That's why I can never remember. It didn't have a handy name like the CARES Act. Like that was easy. But yes, if you Google the bill for mixed income earners, you will get that. Let's see. Elise, you're welcome. Elise is saying, I think they needed a minimum of $5,000 claimed in self-employment or in some sort of mixed income to qualify for the extra 100. I think you're absolutely right. Now, what we don't know yet, or at least what I have not seen yet, is that $5,000 like per thing? Is that $5,000 together? I'm not entirely certain what that is. And Carrie, I know you're on here too. If you know more about that, or if anybody else has researched that more than me, let me know. But I think that that's going to be I think it's 5,000 total, but I'm not sure if the directive is out there for that yet, and that's probably why we're waiting. Okay. It's entirely possible by the time we get to the end of this series that we're going to know more about it, so we can talk more about it as we go forward too. But they release all these new directives and things like all the time, and so it's really kind of crazy. Let's see, or is it reversed? I have a small W-2 job and it pays far under 5K. See, I don't know if it means you have to have $5,000 in a W-2 and $5,000 in a cash income or your own business, or if it's $5,000 total, because I know that in order to qualify for PUA, a lot of the states wanted you to make more than like $4,600 on a 1099 or in a business or something like that. So that 5,000 mark seems to have been there for a while. And so it may be a total thing, but I don't have the answer to that. I'll let you know as soon as I find out. If you raise your hand, don't forget you have to de-click it or it stays raised all the time. So like, I'll think you're just giving me an air high five and it's fine, but then I'll think you have a question. Okay, cool. All right. Does anybody have any other questions about what I've talked about so far before I move on? Going through, looking at all the things. Should performers declare all of their tips? Yes. I don't know if you guys, I think you were on here already, Rick and Jan, when we were talking about cash income, but yeah, the cash income, that's tips, that's, merch, that's cash in your booth sales, whatever you get, you legally have to claim all of that income. And not claiming it doesn't make any sense. And I'm going to tell you, performer people right now, the same thing that I've told people in my seminars forever. I know specifically of a group of entertainers whose taxes I did before I started doing their taxes. And the reason why they had to come to me to do their taxes was the state came into the festival, sat in their audience all day long for every one of their shows, and then handed them a tax bill at the end of it that they had guessed at based on what they saw from tips on every show and merch that was sold. And they handed them a bill in order to prove to them that they did not owe all of that money, because of course they have expenses to offset against that income. They had to do 7 years of tax returns. So that is exactly why, that is a true story at a major festival in this country. Yeah, yikes is right. You want to make sure that you're reporting that cash, because you think that nobody's seeing all those tips, but that is something that happened to people in our community. So yes. Okay. Reese, an article that I just read said the $100 for mixed income earners is not guaranteed in the bill. States must opt into the new program. Thank you for bringing that up. That is absolutely true. When I had looked at it last, most of the states had opted into that program, but I'm not gonna lie, I haven't looked at it in probably 2 weeks. So we could look at that again. Also, Reese dropped a link into the chat that's got some information on the mixed income earners. So if you guys want to click on that, then you can go check that out as well. Okay. So, okay, we're going to go into a big information dump on all kinds of the expenses and things that we can write off. Is there anybody who has questions on anything we've talked about before we start jumping into the world that is expenses? Okay, Carrie says, I always tell people who sell items for a rounded figure to say taxes included. Oh, that's a real good point. I'm going to talk about that a little bit later when it comes to sales tax. Carrie's talking about sales tax in a booth, that if you use a rounded whole number and you're not assessing a sales tax at the end, that you need to say not there's no tax, but tax is included. That is super important because the other thing is that these state sales offices will come secret mystery shop your booth. And if they hear you saying no sales tax, I've covered the tax, like all the things that people like to say, oh my God, so much trouble. So you do not want that. And I also want to advise people, now Carrie, I think only does the shows in Texas. So she probably doesn't deal with this in her own booth, but every state has their own rules about whether or not you are allowed to include state sales tax in your prices and do a round number or not. Some of them you're allowed to, but you have to post a sign that tells everybody that it's included. One of our states makes us use a freaking rubber stamp on every single receipt, and we have to write a receipt for everything that says sales tax is included. Some states you cannot do that. So you have to use coin change and your receipts have to show the breakdown of tax. Like, it's insanity. And Uncommon Adornments does like 20 different states, and we have an amazing accountant. But you should have seen the year we started having to do all that shit. Not cool. But she's right. They will come in and they will check on that stuff. And she's saying the sales tax people can be assholes. Yeah, can be. I'd say like not being an asshole would be like the exception to the rule. Sorry if there's any state sales tax people ever watching this. I'm sure you're like the cool one, you know, super nice. So Christy says, we say we pay the tax for you. Is that acceptable or dangerous? I would absolutely change that to what Carrie says, and that's exactly the verbiage we do, which is sales tax is included. That comes from the government websites. That is the language they want you to use. Sales tax is included in this price. You are welcome. You know, that sort of thing. So I would switch it up to that for sure. See, Kat says we just started last year putting pre and post tax prices on our price tags. Yeah, we do a receipt for everything. So, you know, obviously I do taxes for a living. So like we're pretty anal about the receipts in our booths. So we make sure that we break down everything. Even if the state allows us, we still show a breakdown on that receipt. Because if we ever get audited, those receipt books are what they're going to want to see. So we want to prove that we're doing it right, the right way. And if we include the sales tax in our prices, our receipts back it out. So it shows it going backwards as well. Is it more work? Yeah. Is it a pain in the ass? When you're slammed, but it's not as much of a pain in the ass as an IRS audit. So yes, Adrielle has her hand up.
So I work for, when I'm not doing my business, I work for someone and we do, if they pay with a credit card, we add tax, but if they pay with cash, we just include the tax. So how would you word that? Because normally what I would say is exactly the, like, if you pay cash, we pay your taxes. We don't pay fees. So that way you get a break.
Carrie also does taxes for a living, and she's probably also feeling that queasy feeling in her stomach like I am right now. That is exactly what the controllers are listening for when they're going to booth in these states, is things like that, because you can't skirt sales tax because someone pays cash and that's what it sounds like.
Right.
And what they're hearing is, if you pay me cash, I'm not going to charge you sales tax, and I'm also not going to give it to the state. And those state people, that you think the IRS is bad, those state people, if you think about on the news, like especially back when like the economy crashed, we would hear all the time about states going bankrupt. Remember all that? These states want their money. They're going to come get their money. And they're quicker at it and more efficient at it than the IRS. So I would absolutely include sales tax in your price and make sure that you're changing your verbiage to sales tax is included across the board.
Now, since it's not my business and I don't have control over that,
maybe a
how
kind
would you-
suggestion. And if I know
Yeah.
this person, send them to me. And even if I don't, you can still give them my email address and I will explain to them all of the pitfalls of using certain language.
Yeah. Okay.
Okay.
Yeah. Okay.
Okay, let's see. So Carrie is saying, unlike the federal government, most states such as Texas cannot run on a deficit. They must have a balance every year. Absolutely true. So, and taxes are where they're getting that. So that's their drive, and it's absolutely true. Lee says we actually pay all of our taxes, but we calculate it and deduct it from cash after the day. We actually pay all of our taxes, but we calculate it and deduct it from the cash after the day. So you're saying you charge the sales tax in a whole number price, and then at the end of the day, you back the tax out, and your sales are that you don't consider your whole amount of sales. You back the tax out, so you've got the pre-tax sales that you consider your sales for the day. Yes, that's what we do as well. So you want to just make sure you're keeping that separate. Your sales include your gross sales when you do your taxes. Your gross sales include the sales tax that you take in, but then it becomes a deduction when you pay it out. You have to remember that sales tax are like you're holding on to the consumer's money. It's never been your money. I always beg everybody to please pay their sales taxes like as soon as they possibly can, because you start thinking that's your money and it's not. You're just kindly holding on to it for the person who bought your thing, but it belongs to the state. It needs to be considered like that. Kat says, our receipts are generated by our inventory program. It adds the tax automatically. So we need the pre-tax price on the tags in case the item and price need to be manually entered for a transaction. Yeah. Like in the Square, you can set the Square to like charge tax on the backside and stuff like that. I'm not a fan of the coin change. It's extra pain in the ass, but it's unfortunately like the better way to be doing the things. Just make sure you're keeping that separate, keeping track of it, and paying the sales tax. I didn't mean to verge into sales tax this quickly. That's like later, but we've covered some of the topics, so okay. Let me just say, Molly says I do the same thing as a lease if I've included sales tax for repeat customers. So tell me, Molly, a little bit about that. You do something a little bit different with the sales tax for your repeat customers?
Yeah, if they, because I have high ticket items, like if I spot a repeat customer and they've come back and they've dropped more than $100 in my booth, we include the sales tax, but then at the end of the day, like I back figure it and actually added in what I should have owed.
Okay.
So
what
my
I would
receipts
suggest,
check out, the verbiage doesn't.
if somebody were to step foot in your booth who worked for the state, the better way to do that is
Right.
instead of telling the customer, I'm paying the sales tax for you, tell the customer, you're so amazing and you're such a great repeat customer that we're giving you 10% off. That's the better way to handle it. And if a state salesperson ever came into your booth, that's a-okay. But the moment you say, we're eating the tax for you, you're such a great customer, I'm not going to charge you the tax. That's the big, yeah. Okay.
Gotcha. Okay.
Cool. Let's see. We added it on for cards, essentially giving a discount. Elise is talking kind of a little bit about what you're talking about right now. So again, Elise, same thing I just told Molly, give a discount if it's a great customer, whatever you want to do, but make sure that your sales tax is to the letter. Now you charge sales tax on the total price. So you're kind of giving them a double favor. You give them 10% off, then it lessens their amount that they're taxed on. So you kind of did them a favor and you made the sales tax people happy. So like win-win for everybody, So that's definitely the way I would suggest that. Okay. All right, cool. We're going to circle back around to sales tax. So if you come up with more questions between now and then, let's come back into it. We covered a lot of it. You're welcome. Okay, so we're going to go into like a big list of things that you can write off. And if you guys need me to like email you or PM you all of this because you couldn't write fast enough, I totally can, no biggie. When people do, when I do their taxes, I send them a tax organizer. It's got all these categories of possible write-offs. Even when I don't do someone's taxes, they're trying to learn to do it for themselves, I'll still send them my tax organizer sometimes so that they can just get an idea of the possibility of expenses. Because a lot of times people look at that list and they're just like, oh shit, well, I didn't know I could write that off. All right, well, I didn't save any receipts for that this year, so I guess I'll start that next year. But that's kind of the point of all this, is you may not be writing off all the things you can, but you can start now in getting ahead and maximizing your deductions for next year. Okay. Yeah, Kat send me a message. She's like, yeah, I like that list now. Send me, remind me after this call, Kat, PM me or email me or something like that, because I have my mother's memory. I'm sorry, Mom, you're on this call. You're not usually a part of this when I blame this on you, but it's very true. She'll tell you.
Yes, I'm here and I hear you and I agree.
Okay, good. All right. Things we can write off. So here we go. If you're a pass-through entity, a business owner, independent contractor, you make cash, all this stuff is the same. The only person who cannot write this stuff off are people who get income on a W-2. That's me. As of 2018, we cannot write off any of this stuff anymore. Thank you, Congress. I have all the same expenses you guys have, but because I'm given a W-2, I can no longer write them off. So now I have to be a little more creative and due diligent to make sure that my business is what is purchasing these things and no longer Brande as an employee. So if you are a mixed income earner like we're talking about, make sure you pay attention to that. You cannot write off anything like anything anymore if you get a W-2. But everybody else, all the rest of us are going to be all of these things, okay? So let's start with the big one. That's your vehicle. Most of us have a massive deduction with our vehicles, especially if they're newer and they're still depreciating. On the vehicle, you need to keep track of and can write off mileage. When we get into actual expenses, fuel, oil, repairs, maintenance, tires, insurance, license, registration, loan interest. I'm not gonna lie to you, I write off my Pandora subscription. I have that in my truck, which keeps me awake when I am towing my life across the country. And it also keeps my mind focused when I'm doing people's taxes. So I write that stuff off. If I have to buy new seat covers because my butt sits in that truck too much driving across the country, I write that off. You can write off literally everything that has to do with your vehicle. Now, if you go put on some like banging rims on your vehicle, I don't think that's any of us, but if you do, like, you know, that's probably not really like a business required expense. So it may not be the way you want to go, but literally everything else vehicle related. Okay. We're going to talk in a minute a little bit more about mileage versus actual expenses, but I'm just going to rattle through more things we can write off first. Okay. The business percentage of your cell phone use. Our lives are on our cell phones. It's inevitable, more so in 2020 than ever. But even pre-2020, remember that, you guys? Even pre-2020, we use it to run the square in the booth. You use it for ordering supplies, social media for advertising purposes, social media for hiring purposes, social media for getting a gig purposes, filling out contracts, running a website, ordering supplies. It's a business percentage of your phone. So if you have a phone, you're going to have to do a little figuring to figure out what your business percentage is. Is anyone ever going to be able to verify that? No. If you put in 100%, they're going to call some BS on that because they know you're like streaming Netflix and scrolling through Facebook. They're not stupid. It's like, don't be ridiculous. But I would say it's real easy to say that most business owners write off 50 to 75% of their phone usage, especially the fact that we have higher plans for data and stuff like that that's required for traveling, GPS you know, it's across the country. It's all just super crucial. So that's one thing that I see people miss a lot, is that phone bill. The internet fees, website hosting fees, Patreon fees, PayPal fees, Square fees, all of those fees that are associated with having a business online, which thanks to this pandemic are more fees than we've ever charged, because everything, or been charged because everything's moved online. Let's see, Molly is asking if it's your, wait a minute, let me scroll up, it's scrolled down. If it's your listed business number, can you write off the whole thing? If you have a phone, this is kind of like that whole home office in an RV thing. You can't really have a home office in an RV because there's just no way in hell that you work only in the living room and you don't ever take a nap in there, or like watch Netflix or pet your cat. So unless the only way you're going to deduct 100% of a phone for business is if you have a secondary phone that is your personal only phone. So maybe you do use 90%, but just think about what it sounds like on the other end to the IRS, and just be realistic about it, I guess. Adrielle is saying, if we watch Netflix while we're making product, is that a write-off? Yeah, I write off my Netflix, I write off my Prime, I write off my Hulu, I write off my Pandora, I write off my Spotify. I all these things, you know, like these are all the things in our lives. And when we're working out of our house because we can't go anywhere, hell yeah, absolutely. I write off all that stuff. That's just a fact of life of business. If we worked in the mall, we'd have to subscribe to some sort of channel to play some music in the background for our customers. Like, you know, I think that's reasonable and understandable, especially in the pandemic when we're working from home. Let's see, moving on through some more expenses. Postage, all postal service stuff. It used to be just mail forwarding to catch up to us all over the country. Now that we're mostly sitting, for me, it's new supplies because our businesses have moved online and we're shipping everything like crazy. Whoa, what's happening? Is that me? Oh, hold on, decline. It's a tax client calling me. You just don't just call, like text first. What are you doing? Just kidding. It's like, that's a rule, right? I could be napping. I could be on a webinar. Okay, so postal services, the actual shipping, the packing materials, the boxes, all the stuff we're having to do right now in order to safely transport our stuff to all of our customers, that is all deductible, 100%, every inch of that stuff. We pay stamps.com. We have a subscription, it's not really the right word, but we use them. They get some discount prices from USPS and stuff like that. So we pay them like a monthly thing. So we write that off. Like it's all those things. You had to buy a scale for your packages, deductible. Everything associated with that is totally deductible. If you're printing your labels, that means that your printer and your ink are deductible, like all that stuff. You had to buy a new computer because your old computer sucks and you can't run an Etsy off that piece of crap. Yeah, that's all deductible as well. Everything that came with like getting everybody online, that's all deductible. If you have Patreon, your Patreon fees, deductible, like all of that stuff. Storage units, if you have a storage unit, like I think a lot of us do in traveling for a living, that's deductible. If I had a house, I would have it in my house and I wouldn't pay a storage unit, but I don't have a house because I travel for a living, so storage unit. All the insurances, business insurance, health insurance for the self-employed, vehicle insurance, liability insurance, all the insurance that's business related, obviously. If you have to have certain kinds of insurance for your profession, those kind of things are going to be deductible as well. Adrielle is saying, I use pirateship.com for shipping labels discounted, but no monthly fee. Pirateship.com, I've never heard of that. Okay, cool. Reese said, so since I have one job that I get a W-2 from, that means I can't write off anything from my 1099 business. Do you get a 1099, Reese? Okay, so you get a 1099 and you get W-2s. So you have to allocate the way I do then. So you have to be careful to understand that your vehicle and all these business expenses go against your business income and not against your W-2 income. It used to be if you had a W-2, you would write off all those same expenses on a Schedule A, versus the Schedule C for your business. But now unreimbursed employee expenses, you can't do anything on a Schedule A anymore unless you're, I think it's a firefighter. It's like the only person who has a section on there. So we can't write off anything. So you just have to make sure that you're allocating your expenses over to your business side, and be smart about how you do that and how you pay for things and where they go. But yes, it's being more smart about how you're allocating it now. And if you have further questions about that, let me know, because that's my tax return. You're welcome. Licenses and permits, like we just said, if you have to have permits to open, sales permits, any sort of business related licenses and permits, that's all deductible. Tolls. So when I leave Bristol and I go to the Carver show in Massachusetts, I'm towing. So I have a 1-ton diesel dually and a 40-foot fifth wheel. So it costs me $150 one way in tolls. Yeah, holy axles, Batman. It's a fabulous drive. Like it's, you know, I don't go through many cities, and I can get off and use those cool little service plazas and jump right back on. Like, it's amazing. It's worth it. The roads are great. But I got an iPass because it works in most states, and it gives you like half off in some states, and it gives you a discount in other states, and you can blow through those tolls and not have to stop in most of them, which when you're towing a trailer with rambunctious cats inside, that's like really cool. It's a good idea. They're always screaming at the toll booth workers like, let me out, let me help me, rescue me. I'm like, they're not listening to you. They're not going to rescue you. Adrielle knows. She's like, yeah, I got those too. So your tolls, save those receipts too. Don't forget that. I get an iPass bill, so that's super easy. I can just print off a PDF from iPass. Awesome. Your assets. This is a big one. Assets are generally a big purchase over $1,000. So the real simple, easy things to think about for assets are booths, trailers, like I just talked about. If you have a nice expensive computer, a printer, depending on how much, your tools, maybe you're a musician, you bought a new guitar, maybe you bought a new harp, you know, whatever it is that you write off, all of those things, generally the most expensive things, can be asseted out and depreciated out over a number of years. When you first put an asset into your business, start using it for business, you need to talk to someone who knows what they're doing. If you have a tax preparer, talk to them about not just what your tax year for this year looks like. And of course, when we're talking about tax year, we're really talking about last year. So in 2020, not just I put this new asset into my business in 2020, but what does your 2021 look like? We don't know, but like just hypothetically, what does your 22 look like, 2022? So like back when life was normal, I would want to know, I just got into 2 new shows. So my income next year is going to be way more than my income this year. Like, you know, back when that's the thing we discussed. And so I need to make sure that I take this asset and divide it over an amount of years that's going to get me a write-off a lot more than just this year. Because when you first put it into your business, you can take a massive deduction. You can even take, in most assets, you can take 100% deduction on year 1 if you want to. In 2018, Reese, I knew that they were going to be changing the tax laws for me on a W-2. So on December 28th of 2018, I bought a brand new truck and I depreciated the entire effing thing on that tax return, because smart, I knew it was coming. So I was able to do that on that tax return, knowing that in the subsequent years, that deduction would be taken from me. So it's kind of about knowing not what's happening now, but also what's going to happen in the future. Booths are going to be a little bit different. You can do like what they call a straight line deduction. It's going to deduct the same amount of money across the life of the asset. You know, if you have a booth that's a $40,000 booth, that's going to be like a 15-year asset. So you're going to write that off across 15 years. There's another kind of deduction where you can kind of understand that an item actually does depreciate like a vehicle. So you may take more of a deduction on year 1, and then every year after that's going to depreciate a little bit more as your vehicle becomes worth less. So it just depends. That's kind of that's probably the main reason why I think a lot of people don't do their own taxes, because it's a complicated thing of something like that, like an asset. But if you do your own taxes, there are people out there like me, like Carrie. I don't know if you guys know Carrie Kelly, but she is in TRF in Toontown, and she's been a tax pro, and she and I chat all the time about tax stuff. But you know, there are people out there who you guys know who you could say, hey, I bought a thing. How should I depreciate this? If you do your own taxes and like TurboTax and stuff, they'll likely pick the best thing for you, but not knowing what a booth is. Like, I don't know that they're necessarily going to pick the right strategy for you. So it's worth running it past somebody who knows what they're doing about assets particularly. We're going to talk a little bit more about assets in a little bit. I have a lot of actors and musicians who write off their gym memberships and their makeup and their training and things like that. I don't have an issue with that at all. I mean, I've seen some of the tax returns for some of the big performers in the industry, famous actors, and that's just a requirement of being a face of the people, you know? And you got to keep yourself in shape and things like that. If you own a leather business like me, the IRS is probably not going to understand that I need to fit into my bodice. So I don't write off my gym memberships. I would like to explain to them how important it is to fit into your bodice, but they're not going to hear me on that. So, but they do write off makeup and hair and, you know, nails and things like that. And when it's a requirement of your job like that, that's okay. Rick and Jan are saying they love that pig chow is deductible. I don't know if you guys know that Rick and Jan are the proud mom and dad of Snorkel, the pig who they work with in their shows. And yes, pig chow is absolutely deductible. Just like any, you know, it's they're part of their business. So yeah, all of those things. The paper that Snorkel paints my paintings on that I have on my wall, they get to deduct all that, the paint, all that stuff. You put Snorkel to work and they can deduct it. It's awesome. Okay, meals. Meals are something that's gotten a little interesting, you guys. So I've always been a big proponent of the per diem. The per diem is a meals allowance that you get when you're working away from home. You get it for every day that you're away from home. So if your home is in Ohio and you're doing a show in Arizona, you obviously aren't going back home during the week. So you're going to get every single day that you're in that state. The travel days don't count toward what I'm about to tell you. So it's the days that you're in that state, required to be in that state for work. The minimum is $55 per day for food per person, but it's only 50% deductible. Now, that still adds up to a massive, massive deduction for most of us, but it's only 50% deductible. Now, something that they just passed in the new bill, which is stupid exciting. Back in the day, they used to let us deduct 100% of business meals. They have now, because the restaurant industry has taken such a brutal hit from this pandemic, they brought out a new part of this bill that in 2021 and 2022, so this doesn't count for the tax year we're talking about right now, okay? We're talking about this year. So 2021 and 2022, meals for business purposes are 100% deductible again for 2021 and 2022. That's good. Now with a per diem, you didn't need to save receipts necessarily. Your travel receipts would back up where you were and why you were claiming the per diem. But if you're going to take actual meals at 100%, you got to start saving those receipts. You have to have had a business conversation. It can be with your partner, your significant other, your spouse, your employee, or whatever. But you talked about work, you know, over business, over dinner, and you can write that off. The other thing that's kind of cool about this, because of the pandemic, and this is the one I'm like turning cartwheels over, not really, I would go to the emergency room, but like mental cartwheels, is takeout and delivery counts toward that. So I don't know about you guys. I don't know how remote you are, but I'm literally in this pandemic in my RV, like picking where I'm going to go based on if Instacart and DoorDash deliver there, because I'm not going anywhere. And so I'm just like living off of DoorDash, and that's all now 100% deductible for business if you're using it for business. So you need to be, you know, like smart about this. When we get back to work and stuff like that, like just ordering dinner because you don't feel like cooking, be careful. But if you're like me, which is I'm ordering food because I'm super busy and I don't have time to stop. So bring me my food so I can eat while I'm working. Yeah, deductible. The differentiating line for that is prepared foods. So like ordering something from Instacart for groceries and stuff doesn't count. If you get something sent in that's like a pre-made salad from Walgreens, I don't know why you would do that, but if you did, like, that's not going to work. That would work as long as it's like prepared foods. That's the line. So that's something that's super cool for 2021 and 2022. So I'm a big proponent of the per diem, but for the next 2 years, I think we're going to get a bigger write-off, especially because as 2021 is already starting to look, I mean, my first possible show is Bristol. So that's half my year. I can't get a per diem if I'm not traveling. So that 100% meals, that's where I'm going, because per diem requires travel, and I'm not doing that. Somebody has a couple of questions. Okay, here comes Carrie. If you're away from home on business overnight, say 8 weeks in Arizona, you are not supposed to take meals or expenses on the days that you are not at work. For example, if you take 2 days off to go play in Lake Havasu, you can't take those days. Correct. And then days at the festival, days working in the shop, those qualify for per diem. Also, the day you leave home and the day you return home do not count. Okay, so what she's basically saying is this. If you are a hair braider and you only work on Saturday and Sunday, and you have to prep your shop on Friday, and then and you're getting flowers for your braids and stuff like that, but Monday, Tuesday, Wednesday, Thursday, you're not actually working at all. You're chilling, you're hiking, you're doing whatever. She's saying make sure you're paying attention to the work days and the play days. And that would be important for lots of things. But that is definitely important. It's going to be hard for somebody to prove work days and play days, but if you did get audited and then they showed that trip to Las Vegas, that might be a little hard to justify the per diem on those days. So it's kind of like business meals, like be smart, don't abuse it. And you probably won't get in trouble for it. Elise is saying, how does this differ from the meals and entertainment? Meals and entertainment, it used to be called meals and entertainment. P.S. Entertainment doesn't exist, period. That's been gone. It's not back. We talked about this on the last one. If you're the type that likes to entertain a client at the baseball game, like we all do, if you're that kind of person, the tickets to the game are not deductible. That's entertainment. But if you go there and you guys get hot dogs and beer even, like that's all deductible at 100% under this new law for 2021 and 2022. So when we're all back to like, let's take the whole booth out to sushi and drinks as a thank you, that's 100% deductible now. So, okay, fun times, keep your receipts always. And Elise is saying, is it better to claim the meals and entertainment rate or actual receipts? I'm going to say it depends. I'm going to save all my receipts and I'm going to compare. So at the end of the year, I'm going to add up all my business meals at 100%, and then I'm going to add up my per diem and at 50%, and I'm going to take what's most advantageous for me. So Laura is saying, can you take a per diem when you're in Arizona and actual meals when you're at home? Yes. Okay. So if let's say Bristol opens and I get to go to Bristol, I can claim a per diem through Bristol. Whereas right now, as I'm sitting my butt in Arizona doing nothing in my RV except for working my butt off and ordering delivery, I can take the actual expenses for the delivery. So yes, you just need to make sure that your documentation backs that up. I did travel to Bristol. I was able to write off this per diem because I was away from home. So you just need to make sure that your documentation is proving to the IRS, should you ever need to, that you did claim both ways, but you claim them for separate portions of your year, and here's why. So keep up with the documentation. Okay, so just reading through the comments to make sure. Right, and Elise is saying I work almost every day. This is what I was going to say too. Like Carrie was just saying, you don't want to do the per diem for your play days. If you make what you sell, we work almost every day. So we're writing off per diem almost every day. I use the hair braider example as somebody who may not be working and making product during the week. But like for me, you know, I try to take Tuesdays as my play day. I try. Doesn't always work. Maybe I'm doing taxes instead. That's like my day off, as I do taxes, you know. But if you're working, you get those days. And for a lot of us, that's all the days. It's definitely feasible that when you're at a show making your own product, that's all the days. You know, remember that whole thing we we just work 2 days a week. Yeah. Okay. So in the Molly is saying, in the age of electronic transactions, is a credit card statement sufficient for receipts? It's how I pay for almost all my road stuff. We're going to talk about this a little bit later, but since you brought it up, I'm going to go ahead and tell you this. An IRS auditor told me this scenario to remember specifically. A bank statement and the fact that it's on a credit card statement or something like that, that shows where you bought it. It doesn't show what you bought. Itemized receipts are king. As she explained to me, you might spend $75 at the 7-Eleven, but I don't know if you spend it on fuel or on Slurpees. That's an actual quote. All right, so that itemized receipt is going to show that you spent it on fuel, and therefore it's deductible. Bank statements purely show that you purchased it and not like your sugar daddy or something. But your itemized receipts are what everybody wants. Now, in this day of like digital receipts are fine too, as long as they're itemized, but it needs to show what you purchased, not that you purchased. Does that make sense? Okay, right. Elise is talking about that whole we only work 2 days a week. She's like, so what do you do the rest of the week? LOL. Yes. Okay, so let me get back over. Oh no, there, I made my screen full again. Okay, got it. Does anybody have questions on we're going to talk about mileage versus actual right now, but on all the other stuff that I just rattled off about expenses and stuff, do you guys have any questions, anything that I left out that you're wondering about or clarification you need before we move into more detail about vehicle? So not about vehicle, but anything else. I'm looking through. Okay, that just means I'm talking a lot and you're hearing all the things. Okay, good. Let's move into the hotly debated topic of mileage versus actual expenses on a vehicle. I'm just going to tell you right now that I am team actual expense. Unless you are driving some sort of electric vehicle or something that isn't a 1-ton diesel dually towing a fifth wheel. Maybe you have a small little baby car that gets awesome gas mileage and you only do a couple shows. Like, there are very few reasons in our community where it's more advantageous to do mileage versus actual. Mileage is easier. You only keep track of one thing. All it takes, though, is one tire year, one transmission year, and then that mileage thing doesn't matter at all. I do a full loop of the outside of the country on a normal year. I do Arizona to California to Bristol to Massachusetts to North Carolina to Louisiana and back to Arizona, like all the things. I've never written off standard mileage in any of my years ever. Now, if you in the first year you put your business into your vehicle into business use, if you use the actual method on year 1, you have to stick to actual because that also includes depreciation. If you start with standard mileage, you can go back and forth year after year, and the software will basically choose the best method for you. I think I have, of 200 clients, I have maybe 10 that take mileage. Most of those 10 take mileage because they didn't keep track of anything else. It's a little higher for the people who are just learning to do this because all they were ever told is take mileage. When you travel as much as we do, that's just not going to be the best deduction most of the time. And as Carrie is saying right now, if you take actual, you still have to keep track of your mileage. Mileage is 100% required, period. You can take that as a minimum, simple, easy, run and be done deduction, or you can maximize your deduction by claiming actual expenses. The reason why mileage is crucial to keep track of is your mileage proves your business use percentage. So if I do your taxes, on my vehicle page, I ask you for your total miles driven during the year, and then I ask you for your business miles driven during the year. What that does is establish a business percentage. When we're on the road full time, my business mileage per year, maybe 80%. It's so not that right now. But what that does is establish your business percentage. Let's just say it's 80%. That means that when you use your actual expenses, like your fuel, you would take your total for everything. And I cannot reiterate this enough. Please don't separate out what you think is a business fuel receipt from a personal fuel receipt. That's not the way this works. Total everything. And then if your mileage proves that you drove 80% for business, then you get to take 80% of your fuel, 80% of your insurance, 80% of your repairs and maintenance. That's why mileage is crucial to hold on to. So what I do, we're going to talk a little bit later about have a system. I love spreadsheets. I'm like the queen of spreadsheets, love a spreadsheet. But during the year for my receipts, I'm big fat slob, and I have 2 receipt things. I have a folder in the truck, and I have a folder in the filing cabinet in the house. And I write the tax year on the front. So I have a 2021 happening right now. On New Year's Day of every year, I go out to the truck and I write down my odometer reading on that 2021 folder. And every New Year's Day, I go out and I write the end odometer. And then I get a new folder out and make a 2021 and put the starting odometer on the 2020 or 2022 on the 2022. So every New Year's Day, I got 2 folders, an end year and a beginning year, and I'm writing down the odometer. So at the end of the year, I have my odometer reading, and then I can use, we're going to talk a little bit later about apps and stuff. The apps are awesome for tracking all your business and personal miles these days. But you can certainly use Google Maps as your friend to remind you how many miles you traveled state to state. But don't forget, there's more than that. There's business travel during the week. I have a specific system. I go to the bank on Monday to make deposits. I go pick up stuff on Friday. I know that my drives on Monday and Friday are business drives for the most part. Maybe there's a Home Depot trip on a Tuesday. Have a system. Have a notebook in your vehicle if you're a pen and paper person. Or for the love of God, get one of these amazing free apps. There are mileage tracker apps out there that also are receipt trackers and stuff. We're going to talk about that like a little bit later, but I'll tell you a couple of them right now. Quickbooks Self-Employed is one that a lot of people use if you're a Quickbooks person. That is a love it or hate it software. I'm aware, but it integrates with the Quickbooks in your computer. So a lot of people love that. That is a subscription service. It's like $12 a month or something, but it does a lot of stuff. Carrie hates it. I hate it. I think most people who do what we do hate it. So I don't know, but there are a lot of people who love it. But there are free programs out there like Stride and Everlance, Mile IQ. Mile IQ, I think, is still a mile tracker only. I haven't looked at it recently, but Stride and Everlance do the same as QuickBooks, and they're free, where they're a mileage tracker and a receipt keeper. So there are all these preset categories that are in these apps. So fuel, easy. You take a picture of your fuel receipt right at the pump, and then it'll come up in the app and say, how do you want me to categorize this, ma'am? And then I'll say fuel. And if it's a receipt that doesn't work for their preset filters, like booth fees, something like that, you can create a category. So you can take a picture of that. You can take a digital email. Some of these will let you sync up your email that you get from Amazon when you make a purchase and stuff like that. And then it'll just ask you where you want to categorize it. At the end of the year, it's going to give you a full PDF with a breakdown by category. Like, awesome. I'm a fan of all the digital receipt situations, especially when you live in an RV, when you're traveling in just a van. You know, having a digital backup for all these things is so smart. And if you do get audited, they want copies of your receipts. You're not sending originals, so they don't know if it's paper or if it's digital. Plus, if anything ever happens and your vehicle gets in trouble, Lisa's like, what? This is why I'm here. If your vehicle ever, like, you get in an accident, something, I've seen RVs that burn down, things like that, and it ruins years of receipts, and then they, of course, get audited. A digital backup for all these things is just smart, period. There are lots of things for years that have been mile trackers, and then separate things that have been receipt keepers. But these free apps do it all now. In the mileage trackers, what it'll do is you'll drive to a thing, and at the end of the day, like I had Everlance for a long time, and I did like Everlance. I have not used Stride, but I know a lot of people that love Stride. When you drive, you know, you got your phone on you, like that's a thing. At the end of the day, it would ask me, it would show me a Google Maps of every single start and stop I did all day long. And it would say, is this one business or personal? And I would literally swipe personal, swipe business, swipe personal, swipe business. So at the end of the year, In that PDF, it told me all the miles I drove and it broke it down by business or personal. Bam, done. Awesome. So yes, get yourselves one of those. Are we using that so much right now? Not a lot, but it's, again, this is a good year to get started with it. Elise is cursing in the chats now. Just think about this, Elise, as a good thing going forward to make your life easier. That's what this is all about. I'm having a Tourette's moment over there. Let me get back into this and just make sure I've hit all these bullet points, okay? Still track mileage, business percentage, app for that. Okay, I think I covered everything on the actual versus mileage. Anybody have questions on that before I move on? And again, if you need me, if we need to talk about this later, we can come back in and talk about it later. You can PM me for more specifics and stuff if you have specific questions. What Adrielle asked, let me go back, hold on. Which one do you like? I used Everlance for a while. I'm not using one now, to be honest, because as the W-2 employee with the truck in my name, I can't deduct that stuff anymore. So I'm not using one. I know lots of people in our community who love Stride. If you're into QuickBooks, I know people who've never used QuickBooks and love the QuickBooks Self-Employed, and Everlance. Those are the three that I hear all the time. If you guys have more that you love to use, drop it in the comments. What is the name of the Tinder swipe app for mileage? Again, Molly says, this is exactly what I thought about when Tinder came out. I was like, that was like my mileage app. That's so funny. That was Everlance. I think they all do something similar, but Everlance was literally a swipe left, swipe right. Okay. All right. Any other questions on this before I move on to the next topic? And the moral of the story on vehicle is keep it all. I promise you it's all deductible. And people text me during the year and they'll just be like, hey, Brande, I bought this. Is that deductible? And I'm like, yeah. So you can, if you question it, keep it. Let me know. I'm a babe in the woods. I'm grateful for your shelter. Elise says, I love you, miss you. Okay. So we were talking about keeping a system. Whatever your system is, if it's spreadsheets, if you're old school, you love the notebook thing, that's fine, but have a system. If you ever do get audited, you're going to take pictures of your notebook pages and you're going to send those things in. Professional drivers have driver's logs that are paper logs that they keep in their truck and record that. That's all fine. Keep records, do something that is your system. Like I said, for me, I have an envelope in the filing cabinet. I have an envelope in the truck. I am the worst. I do not organize my receipts during the year. I shove that crap in an envelope. And then at the end of the year, I literally sit down with my own tax organizer on the floor and start making stacks of receipts according to categories and add them all up. Like I do it the same way everybody else does it. I tell myself, like, you know, I'm going to get an organizer. I'm going to do this better. I'm going to add up my receipts during the year. I'm not. So I just know I'm just not. I'm okay with that. So find a system that is your system and stick to it. Find a place to put your receipts. Have an envelope, record your odometer, start and stop time, and just make your life easier in whatever way you're going to do. Yes, Elise is saying they legit fear a shoebox full of receipts. It's 100% true. Just like I said, you send them all those pages of receipts and they're just like, back away from the computer, ma'am, you're fine. I personally have been through, because I'm a W-2 employee and I used to write off everything on a Schedule A. They think that a company should be paying for all those things. They don't understand all the travel expenses that we incur as employers or employees. When they changed that tax law, my company is fantastic, and they started paying our mileage and our camping and all this stuff because we couldn't write it off anymore, and they still can. But back when we used to do that, I would keep all of these receipts, and I would get audited a lot because like 5% of the world's employees itemize. So I've been audited personally like 4 times. It's not fun, but as soon as you show them all your documentation, they're just like, oh, all right, cool, sounds good, bye. And no changes ever made to any of the audits that I've been through. So I mean, I'm doing it the right way. They just don't, they don't understand that. They understand that businesses have expenses, like that makes sense to their brains, you know, but they don't understand that employees have expenses, so they took them away. Anyway, that's my rant. So Oh, if you're one of those paper people, do something every weekend. When you're coming home from the weekend, when you're dealing with your money, make sure you're tracking what you made, what your sales tax was, who worked for you, how long they worked, how much you paid them, especially if you paid them in cash. Just document all the things. If that's your system, fine, but just make sure you document it. And I'm going to ask that if you do that, that you make it a habit of taking a picture of every page with your cell phone, saving it to your computer or an external hard drive, or upload it to the cloud, or whatever you want to do. But keep a digital record of all those things, because if you have like a master notebook and it goes missing, and you know, the dog chews it, the cat pees on it, you know, I don't know what happens. It wound up in a bonfire mysteriously. Like, you're just screwed. So keep a picture of that. One thing we've done for a long time is like, we'll take a photo of our Faire pass and keep it in our phone. So if we ever lose our Faire pass, we've got a photo of it. Like, use the tech. The tech to save all this stuff is like so smart. So so use what you got. I always had this habit that when I would change a show, I would download everything back to my external hard drive. So everything on my phone, everything on my computer, I would always just make sure I've got like 3 backups of all these digital files in case of tech gremlins or evil fairies or whatever they are that eat things. So if you're a paper person, use a digital backup. Everybody can take a picture with their phone these days, I think. So make that happen, even if someone has to teach you or remind you how to get those off your phone and onto an external or to your laptop or something. Reese is saying, for part of the year, I'm a solo employee manager for the booth, and at the end of the weekend, I just send the photos of the sales of the notebook to my bosses. Yeah. And what you just did is create a digital record for your bosses. So that's like a win-win for everybody. So it's beautiful. Yeah. Okay. I want to talk to RVers for a quick second. If you are a full-time RVer, you cannot write off anything to do with your RV and your travel things, because this is where you live full-time and your travel expenses can't be used. If you're a part-time RVer, you can write off the business percentage of your like RV, the expenses that go with it, the insurance, the registration, the tires, just like with your vehicle. When you're required to travel away from your tax home for work, don't talk the IRS into considering you being a full-timer. So and therefore them disallowing all of these things. You want to make sure that you're using selective words like trailer. RV instantly makes people think that you're out on the road living in an RV, bohemian lifestyle, all of the things, you know what I'm saying? So trailer is a word that is a good word to use. Trailer maintenance, trailer storage when you're not using it, trailer repair. You cannot deduct payments on a trailer. Like if you have a loan, you can't deduct the payments, but you can deduct loan interest just like you can on your truck. So that's something to keep in mind, but let's not like invite the scrutiny behind that sort of thing. You can ask me more about that later if you would like to. I want to remind everybody, if you get audited, so the IRS can, we're talking about bank statements and receipts being king and stuff like that, so I'm just backtracking a second. If you get audited, they technically can audit the last 3 years, but if the determination of the audit is that you did something wrong and you owe them money, they actually have the right to audit any tax year at that point. So this is another reason why a digital backup is a good idea, because like I'm carrying around like 12 years of tax stuff in my RV. That's dumb. So if you can switch over to digital, slowly but surely you can kind of stop holding on to decades of records in fear of an audit. So just keep that in mind, that 3 years is the rule of thumb. If you're doing things right, it's not going to go past that. But just an FYI. Elise is saying, during my audit, my IRS auditor said if my travel was more than 6 months of the year, I was an itinerant worker and no longer deductible. As long as it was under 6 months of the year, it is deductible. again, I have been through multiple audits, and they can see by all the per diem that I write off and stuff like that exactly how many days I'm claiming. I think that lots of people will tell you it depends a lot on which auditor you get and how you can explain your time away from home, your time traveling, your time on the road, what's required of you, things like that. So I have definitely made it through claiming 40 weekends of work, but I also don't claim all of the per diem all the time. So it's kind of about making sure that you're not taking insane amounts of deductions that becomes a red flag. So it's being a little smart about it. If you take 365 days of a per diem, you got a problem. so it's about being smart about those things. Adrielle is saying if we have digital copies, no paper needs to be saved. No. As long as you have the digital copy and you're comfortable that you've got it backed up in multiple places, doesn't matter. If you get audited, the IRS is going to ask you for copies of all these things. They have no clue if you have gone to Staples and photocopied all of your paper receipts or if you have just printed out a bunch of receipts from your computer. It's all the same to them. It's fine. Yeah. Elise says her auditor was so nice. She called him like 20 times with questions that he answered. Most of the IRS auditors are actually pretty nice people. I think they get abused like on a daily basis. And so they're if you're kind to them, it's like you're their favorite child. And it's really kind of awesome. Okay. I am going to switch back over here, take a look at this. Does anybody have questions on what I said so far? I'm not really changing topics, but I'm just kind of expanding a little bit, but I don't want to move too fast. Okay. If you have, yes, Reese, I see you.
A couple of us had questions about, I thought it was 7 years of taxes you were required to hold on to. I have an accordion file that I carry everywhere with me.
You know what? I think that the advice has always been to hold on to 7 years. Technically, they can go back 3 years and ask you for an audit for 3 years. I don't know if that's, maybe Carrie knows, if that's a rule that they've changed recently, but it's 3 years. But the risk is if they find something wrong, they can go back as far as they want. They could go back 15 years if they want to. So they're going to start with the last 3 years, but that doesn't mean that's all they can do. But usually when an auditor is working, they're usually working on picking and choosing out of the last 3 years, but then they can keep going back. So it's just smart. I have the last at least 7 years in my RV, and I've got a ton of years in a box behind that in my mom's storage unit. So I figure if I ever need it, it'll be there. That's fine. But it's a good idea. Yeah, Carrie's saying you should keep 7 years for yourself. It's a good idea to keep those around, but as you turn your life into digital tracking, then you don't have to keep that stuff around as long as you make sure that you're backing that up to multiple places. Don't just have your digital stuff sitting in one place. Use an external hard drive, upload it to the drive, the cloud, whatever other things you have to keep double records of these things. Always important. And just like I said with paper, don't just keep the paper, keep a digital backup. So it's always about keeping multiple sources for these. Carrie's just saying the chances of them wanting to audit you that far back is really slim unless you're really shady. Yeah, a lot of us aren't really going to be getting, to be honest, knock on wood, a lot of people in our community are not getting audited. We're not out there making a ton of money. That's not very normal. But if they do see something shady, or in the circumstance of the entertainers that I was talking about, they now have the attention of everyone on them. And so they're going to be constantly looked at and constantly audited. And that's the downfall to doing something not the legal way. Okay, if you have multiple businesses, this is something that I just want to run through real quick. If you have multiple businesses that are radically different, it's important for you to differentiate. You're probably going to have multiple Schedule Cs. Okay, so if you are, I have one tax client who's exactly this. I'm just going to use her as an example. She gets a 1099 and works for somebody as a booth manager. That's one Schedule C. She's a sales associate. She owns her own business and makes her own jewelry and has her own booths at some fairs. That's the second Schedule C. And then she's a musician and she works festivals as a musician. That is a third Schedule C. The reason it's important to keep those things separate, it's kind of like in medical, your procedure that you had done at the doctor has to match the diagnosis. So it's kind of like that with taxes. Your expenses have to match the profession. If you were a sales associate working for somebody running a booth, you can't deduct your guitar strings. That doesn't make any sense. But if you're a musician who's an entertainer performer, you absolutely can deduct those guitar strings. But she's not going to deduct that for her jewelry business. So it's all about making sure you're isolating out what makes sense to expense and income. If you have multiple businesses that you work for multiple different companies, but it's all sales associate, that's all the same. It's all the same expense. That's not necessary to break apart. If you have a couple of different businesses that you own and run, depending on what they are, it may be important to keep them separate. If it's two different jewelry companies, two different names, that's probably not worth separating. But if you have a jewelry company and then you have a clothing company and they operate in totally different festivals, that's worth separating. A lot of accountants and people don't really understand all of the levels of things that we get ourselves involved in. And so lots of people like to lump it all under one Schedule C. That's the quicker, easier way for people to do that. I'm not a fan of that. I'm a fan of the isolation of your things. And what we know right now is that if I would have grouped all of her income under one Schedule C and I put it under jewelry maker, sales associate, or whatever, she wouldn't have been able to get the grant she got for Music Cares under the pandemic because she had a Schedule C that said she was a musician. She qualified for assistance. If we would have lumped that all together and it wouldn't have said that on her tax return, she wouldn't have gotten that. So this is just another reason the pandemic is proving that it's smart to do it the right way and not cut corners. So keep that in mind as you're divvying up expenses. Income doesn't need to be, it needs to be separated out by business, and it needs to be separated out by state. Your expenses need to be separated out by business, but your expenses don't need to be separated out by state or by Faire. Your expenses are 1 year total. Sometimes you may have expenses that apply to one business or another, as we talked about, but sometimes these expenses apply to all of them, like garb. We can write off garb, we can write off costuming. You probably use those for all three of your Schedule Cs. So you're going to take that expense and you're going to apply it to the one that has the most income and needs the most expenses. And beyond that, let me see what's happening here. Both Arizona and Colorado make me use the same sales tax ID for my two businesses. That is why it's become convoluted before I came to you, because I do her taxes. Yeah, and you know what? These states they all have their own rules. It's really kind of crazy. Most of them don't care about stuff like that. But when it comes to the IRS purposes and income tax, I personally think it's super important to keep all those things differentiated for some of the reasons that I just told you guys. So sales tax people and IRS, like they all want something different. Okay. Home office and rental income. If you rent a room in your house, or if you rent all of your RV for 2 months while you're home or whatever, those are the kinds of things that you would report rental income, and you can also write off expenses. Maybe you, I do have some people who have like a whole basement that they rent out all the time, and when they're on the road, that person kind of acts as the manager of the property, and things like that. So that's a big old deduction, and something that's kind of nice. But just know that like you can't rent out your bedroom in your RV while you're in it. That doesn't make any sense. Like we talked about with the home office deduction, you can it's kind of like with the rental property, because you can kind of deduct the same type expenses. If you use a home office, if you have a dedicated workspace in your home, and again, you can't do this in an RV, but if you have a dedicated workspace in your home, you can do a simple home office deduction, which is to take the total square footage of your entire house and then the square footage of just that room. And you can use a simple method for doing the home office deduction, or you can do an itemized actual expenses. So it's kind of like with your vehicle. You can do kind of the easy route, or you can do the full route. If you didn't do a lot of improvements or things or repairs on your house, the simple deduction may be all you need. But if you had to put in new AC because it broke over the summer and you're working from home, you get that percentage of your square footage to your total home footage for your home office deduction. So if you guys actually have home office, I'm not going to talk about it a lot because a lot of people don't, but if you actually do have that, message me and we talk a little bit more about that sort of thing. Okay, Carrie is also saying when it comes to expenses, never deduct the same expense more than once. Like for cell phone usage, for example, should be broken down out into percentages per business. Absolutely correct. If you have more than one business, in other words, it can't add up to be more than 100%. And that's totally right. So if you have 3 businesses, let's not claim the total bill for all 3 businesses. So if one of your businesses probably uses the cell phone data more than the others. So again, don't be a weird red flag person. Like, just be smart about it and don't make the IRS look at you too close. We talked about this a little bit before, but assets and businesses in a pandemic, your expenses don't stop just because your income did or was greatly reduced. A lot of our businesses are going to be in a negative in 2020. We're just aware of that. It's just going to be a fact. The expenses don't stop because the income has dried up, especially if you have assets. If you have assets, you're probably already in a negative before you even, put in any other expenses. Those assets continue to depreciate. They're going to be on your tax return even if you earn 0 income. So what that's going to create is a negative rollover to your 2021, which is fine, because theoretically in 2021 and 2022, when we start making like money again, like back in those days, in 2021 and 22, when we start making money again, that's just going to roll over to those years and become a deduction, become a way to lessen your tax burden in the future years. So I think it's just a fact that like a lot of people's businesses are going to be in the negative this year. That's just how it is. Another thing that was really kind of cool about the most recent bill that went through in December is they actually added a look back feature. So if your business in 2020 is in a negative, probably because of the pandemic, but if it's in a negative in general, you're actually allowed to go back 5 years and roll your loss backwards. So if you had a banner tax year where you owed a whole bunch of money to the government, you can actually take your negative from 2020 and apply it to what you owed in 2018, let's just say, and they'll end up giving you some money back. Does that require amending your tax return? Yes, that's okay. It's a thing that people do. It's not that hard, and especially if you're amending because of a tax rule change that they've done. You're A-okay. It's not a red flag to amend something unless you're amending it for a ridiculous reason. But that's kind of a cool thing. So if you did have any business years where you owed a whole lot of money, that is something that the government has given us right now as a, like, thank you. We're sorry, of the pandemic, a way to help small businesses again. So let me just roll back and see what this says. For those of you who do your own Schedule C, make sure you click the box that says all investment is at risk, or you won't be able to carry forward that net operating loss. Okay, thanks, Carrie. If you're doing your own taxes, yes. If you have a person that does your taxes, they should know that. So Elise, you're saying, are you asking me to speak slower? So basically, if you have a negative in 2020, when we're done doing your taxes, and you had a big tax year where you owed a lot of money in a previous tax year, you can take your negative, basically like an expense, and put it against your tax burden from that previous year, and the government probably owes you some money back. So that's a pandemic new thing that they've done. You and I can totally talk more about that later, and we can compare your tax years and see if it's worth doing. If you think there was a year that you owed a lot of money, if someone did your taxes, go talk to your tax person about this rollback and or net operating loss, and we can talk a little bit about that. We'll talk more about that in the business owner seminar next week too. Okay, I want to go real quickly into state income tax versus sales tax. Does anybody have any questions on what I've said before I change topics? Okay. Okay. I'm going to try and like rifle through some of this stuff, guys, because I know we're getting late here. But I want to make sure that we talk about sales tax versus state income tax. It is super important that everybody understand that we are legally required to file income taxes in every state in which you earn income. There are going to be some states that you're not going to pay taxes. Some states don't have state sales tax. If you earn money in Texas and your home is in Ohio, the sales tax is paid to Ohio, not to Texas, but it still gets paid. Some states are reciprocal. If your home state is Ohio, but you work in Pennsylvania, they're reciprocal, so they talk to each other, for lack of a better word. And so you wouldn't have to do Pennsylvania taxes. You would just do them in Ohio, and then Ohio would take care of if you owe Pennsylvania, they'd give you money. There are some states where when you get done with your tax return, what your net is maybe that you earned in that state. And don't forget, I work 6 different states. I'm not paying the same sales tax to all 6 states. It's allocated based on the income that I earn in that state. Some of those states, you may end up under their income filing requirement limit to where you don't have to file in that state. You're not going to know that till you finish your federal tax return. Every state is different, and they'd like to change it every year. The requirements, like in Wisconsin, are $2,000. You have to earn $2,000 in Wisconsin, you're required to file. Pennsylvania, $33. If you're a non-resident and you earn $33 in the state of Pennsylvania, you have to file a tax return. So every state is totally different. Are you talking about people who sell things or the income we all make? If you have a business that operates in multiple states, you're going to be paying income tax in multiple states. But if you are working in these states, if you work for someone else, you're also doing the same thing. You're paying the tax in every single state that you earn it in. The thing that gets really confusing is, well, my employer is out of Wisconsin. Do I file in Wisconsin? No, not unless you worked in Wisconsin. So it's about where the money was earned. When you get all of your net income, all of your expenses in there, it creates a net income. And a lot of times it looks like on paper, I work in 6 different states, but maybe you only had to file in 3. But you're not going to know until you get to the end and find that out. If you do something like a TurboTax, they're going to tell you if you're required in that state or not. Your tax person will, let you know, obviously, if it's required or not required. I was a resident of Ohio for a long time before I switched over to Arizona. For years, I didn't earn a dime in Ohio, but I still filed a 0 tax return. I'll tell you why, because Ohio started sending me letters and like assessing like a fake amount of money that they thought that I made based on previous years and like wanting me to pay stuff. So I had to start doing a 0 income tax return for the state of Ohio every year. Everybody is different. So you don't know what you don't know. So like sometimes you're not required to file. Like in Wisconsin, I said, you got to make over $2,000. I usually just file those for my clients anyway, for that exact reason. Wisconsin is another state that decided that I had a business there for a while, and then I didn't operate the business there, and they still like assessed sales tax off of a business that I didn't run. So then I had to like prove I didn't run it in that state. States are weird, man. And all I'm saying is keep track of what you earn in every single state, but do know that you are required to file state income tax in all the states in which you earn income. If you're a business owner and you didn't work that fair, you still earn income in that state. So it's all about where that income was earned. Elise is just going on about Pennsylvania. She hates Pennsylvania. Yeah, I get it. $33, you have to file a tax return. It's a hassle to do all these states. I understand. I do 5 or 6 states a year, but it's just kind of a part of our lifestyle. So as a business owner, you have a further risk if you are not filing properly, My favorite thing in the world is my Texas residents and my Florida residents who don't have state income tax, and therefore they never want to do any state income tax returns because their last accountant didn't make them do that, whether your last accountant is an idiot. And what happens is you work in all these other states are owed all these taxes, and you're not paying anybody. Some people like they only want to pay their home state. So my home state's Ohio, and I only want to do my Ohio state return. Well, here's the problem. Arizona wants their money. California wants their money. You know, all these other states want their money. If you paid Arizona what you owed on your total income, and then California comes to you and says, bullshit, you owe me money. Well, at least you can go to Ohio and amend that tax return and say, my bad, I paid you too much. Here's proof that I actually owe this to a different state, and you can get that money back. But if you're a Texas resident or a Florida resident and you paid no states, well, you're just kind of screwed. So now you didn't pay anybody, and now you owe people money. So it's really important to make sure that everybody understands that it is crucial to file in the state when you earn the income. Business owners are putting yourself at even more of a risk if you pay sales tax to that state and then nobody's reporting income tax on that. Oops. How long do you think that's going to take before they put 2 and 2 together? Now, granted, these are 2 different branches of the situation, but like those entertainers I told you about where the sales tax people came and sat in their audience, you damn well better be sure that the income tax people were the next people knocking on their door. So that goes hand in hand. If you're paying the state of Arizona sales tax and nobody is ever paying income tax on those sales, that's going to eventually catch up to you. So that's a bigger risk for a business owner who's paying sales tax too. Reese is saying, I'm a freelance writer as well. Can I just file in my home state for the income I make at that, or in each state the publication is based in? You mean like if you sell a book in a store in Arizona kind of thing?
I write for magazines usually.
Okay. That's all stuff you earn at home. That's all going to go to your home state. So like if you have an Etsy, a website, that sort of stuff, that all goes to your home state for income taxes. If you're doing your own shipping and things, that's going to fall in line with what I'm about to talk about with sales tax. Sales tax has gotten a little crazier due to what they call the Amazon laws. Because of Amazon, now if we make and sell something to a state, we ship it to a state, somebody orders something online from my website. I'm sitting in Arizona. Arizona's my home state. I make the thing, I ship the thing to them, okay? Carrie is saying Wayfair versus South Dakota. Yeah, if you Google the Amazon laws for sales tax, you'll see what I mean, but Wayfair versus North Dakota is a thing that this is coming from. If someone buys something from my website, I'm a resident of Arizona. Arizona is where I report my income tax. But if I ship it to California, if I have a nexus, is what it's called, which means a actual location that I sell from in that state. That doesn't have to be a permanent shop in the mall. That can be a temporary location like I set up at the Southern California Renaissance Fair in a tent. That is my nexus in the state of California. Technically, the sales tax on that sale is supposed to get paid to the state of California. If I ship it to Tennessee, where we don't do that fair, then that sales tax goes to the state of Arizona, to my home state. So it's all about where you have a nexus. So if you do a festival actively, now again, everything's on pause, but in general, if you do a fair actively in a certain state and you ship to that state, you're supposed to be paying sales tax to that state on that sale. It's a big pain in the you-know-what. And I'll say this again, if you aren't doing it, if you haven't been doing it correctly, again, you could amend your sales tax to your home state and allocate it out properly if you ever got in trouble with that. This is recent in the last couple of years. A lot of people aren't doing this in any way, shape, or form yet, and there's really not a lot of enforcement behind it yet, but it's entirely possible that that's coming. So just be aware of that going forward. But in general, what you sell on your website, what you sell online, what Reese does with publications and earning money from home, that's really all going to be allocated to your home state for the purposes of income tax and sales tax. unless you have a nexus out of the state for sales. Does that make sense? Okay. Anybody have questions on that topic? Okay. Want to make sure that I'm hitting a couple of more things. Make sure for sales tax that you're Googling in that state, like we were talking about. Are you allowed to mix sales tax into your price to round up? Things like that. You have to check that every year, guys, because they change things every year. So before we're about to start a state, start a fair, we start Googling it. I've got a lot of lists of the main fairs that we do at least. So if you want that, let me know. And I just want to say a couple of things, new changes due to the pandemic. Taxes are due on April 15th. That extension to July 15th last year is gone. So make sure you know we're back to the April 15th thing. If you ask for an extension to get you to October 15th, just remember that your tax liability is due on April 15th, even if you don't file till October 15th. So if you owe money and you don't pay by April 15th, you're going to start getting penalties and interest. So that's the downside of doing an extension. So keep that in mind. There's an above the line charitable deduction that's been added back in. That's kind of cool. Everybody who doesn't generally get to itemize mortgages and things like that on a Schedule A, there's a lot of stuff in there, medical, things like that. You can write off up to $300 and you get a deduction for charitable. That was not there last year. It's not been there since 2018. It's kind of been a pain in the ass. I'm not going to go through that a whole lot, but that's kind of nice. So make sure you're saving your charitable receipts, digital or paper. Who is this? Carrie? Carrie is saying that Texas and Oklahoma residents have a federal extension to June 15th. I didn't know that. Thanks for telling me that. Okay. Unemployment. For the love of God, guys, if you're on unemployment, make sure you're having taxes taken out of the unemployment. I'm starting to have like panic attacks when I open people's 1099-Gs. If they didn't have taxes deducted and they got 20 grand from unemployment, not okay. Lots of people who had all their taxes taken out are getting nice refunds, which is awesome when you're unemployed. If you have not had taxes taken out of your unemployment, please go into your account and make that change now. Lots of people didn't do it in the beginning because they just thought we're just going to be on this for a few months and it'll be fine. Then they like forgot about it. Well, we're still in this thing, so go change it and have taxes taken out of your unemployment if you're on unemployment. Collecting unemployment while you're doing a fair, while you're earning income on your website, while you're getting PPP or EIDL. I'm going to talk more about PPP and EIDL next week in the business owners meeting. So I'm going to table that one for a little bit, but it's all the same general rule. And that is you keep filing your unemployment, even if you go work at a festival, even if you get a temporary job to hold you over. On that week in your weekly claim, you're going to claim the amount of money that you earned on that week. That may disallow you altogether from unemployment that week or lessen your amount of money that week. But the next week, if you earn zero income, you can go back to getting full benefits. So if you had a show, like let's say you worked Louisiana, you would want to claim income on all 6 weeks of Louisiana. And then on week 7, when Louisiana is not open anymore, you claim zero income, full benefits. But if you stop claiming, some of these states are going to shut down your account. Some states let you go back and catch up and stuff like that. And some states you're going to lose everything. And some states are going to close your account completely. So it is important that you keep your account open, that you claim your weeks, even with income, until the moment that we're all back to doing fairs without fear of cancellation. As proof that yet another festival canceled last minute just last week, we are not there yet. So even if you're going to go do Scarborough, going to go do Sherwood, going to go do Georgia, any of these shows that are coming up, do not stop your unemployment for the love of God. You don't know if that show's going to open and you don't know if it's going to stay open. So keep filing your weekly claims. The other thing I want to remind you is when you're a W-2 employee, you're claiming your gross income. You're claiming the total that you made. I'm still a W-2 employee. My company got PPP during this, so I had 8 weeks of being paid. So I had to claim my total amount of money that I was paid. But when you own your own business or you're 1099 or you have cash, you're actually claiming your net income. That's after expenses. Okay. Some of the websites still say gross income, but there's usually a little something that you can click on for more information that explains if you're self-employed, you need to be claiming your net. So on your tax return, if you look back, for example, at your last year's tax return, and your net is 25% of your gross. So the total amount of money you made all year long is this amount. And then after all your expenses, it's only 25%. That becomes your personal income. The rest is your business income. So after all your expenses becomes your personal expense. 25% is your personal income. I just said expense, but I mean income. So 25% is your personal income. So what that means is if you go work at Scarborough, it's a good estimate because you don't really know what all your expenses are to the end of the year. So you need to use a smart estimate. It's a good estimate to take your normal percentage of net income to gross income and apply that to what you make per week. So if your percentage is 25% normally, if you make $500, let's make it easier, $400 on the weekend in Scarborough, you're only claiming 25% of that. You're only claiming $100, not $400. Okay, so that's really important. The reason that's important is depending on what you're getting paid each week, like I get $240 a week in Arizona. If I claim that I made $239 that week, I get $1 from the state of Arizona and I get the $300 from the federal still. But if I claim that I made $240, I lose all of the state of Arizona and I lose all of the federal. So it's important that you make sure that you're understanding that you need to be claiming net unless you have a W-2 job that you picked up as a temp job. That W-2 job is gross, okay? That's the total that you're paid. Everything else is net. And I would have a conversation with you or talk to you guys about this if you get into working shows. I always tell everybody, just come to me on that first week and I'll walk you through understanding how to do that. But that's really important. That could be the difference between hundreds of dollars per week that you may still keep in your pocket because of the expenses that you incur by going to go do these shows. Website sales, same thing. It's not like you don't have expenses. You're not claiming your gross that you made on the website. That is what your business made. That is not what Brande made. So you need to consider the expenses and claiming the net. During this whole pandemic, I've probably claimed income on 16, 17, 18 weeks, something like that at this point. And then the following week when I have no income, I claim zero and I get full benefits. Like that's what you're supposed to do. So that's the legal way to do that. So please tell your friends, if you hear friends that are going to go do shows and they're on unemployment, please tell them they need to keep claiming through all of that so that they can keep themselves on unemployment until we don't need it anymore, you know. The PPP and the EIDL, that is not income. There are special rules that apply to the PPP if you paid yourself. And we're going to talk about that more next week because that is income that you want to claim on your unemployment. The EIDL is a loan. That is not your personal income. So if you got that, you don't need to worry about that in any way, shape, or form. But again, we'll talk about more of that next week. Does anybody have any questions on claiming income in any way, shape, or form if you're on unemployment right now? Okay. Looking through. Okay. And again, we'll talk more about that next week. Recovery rebate credit. If you did not get any portion of your stimulus that you are due, if something's lost in the mail, if you didn't get the portion for your dependent, anything like that, you can claim that on your 2020 tax return. The IRS has said that all those payments have gone out. If you have not gotten it yet, you're not going to get it. So the only way to get that is to claim that on your tax return. They're not even letting us file these tax returns without answering the question of how much you made. So they're hoping to catch up to everybody. And if nobody's done a tax return and 2020 is the first time, that is the best way for them to get that stimulus at this point, is to start with the 2020 tax return and claim that recovery rebate. Meals, I talked about that. Okay. I think that's mostly the end of my rambling. Before I open this up for general questions, I just want to remind you guys that we're going to be doing this for the next 2 weeks, every Wednesday, same time, same place. Next week is going to be Wednesday, March 10th. We're going to do the one specifically for business owners that I've been talking about. And then our final week is going to be on St. Patty's Day, we found out, which is Wednesday the 17th. That's going to be a tax basics course. So if you have people who need to start from the beginning, tell them to come to that course. Since that's going to be a lot sometimes to learn tax basics, and it's sometimes scary when it's your first time, we've decided to make it a drinking show for St. Patty's Day. So we're going to have some breaks for Irish music, and maybe we'll dance a little Irish jig. Every one of these weeks is going to have a follow-up of a playback on Saturday at 2 Eastern. There'll be Q&A in the comments. So if you had anybody who you know who missed this and wanted to be here, we're going to do the replay at 2 o'clock on Saturday. And that will also be on the Life's a Faire page, and you can find it on the RCF page. You can find it on my personal page. And I think you guys know I share it everywhere. And so then we'll be able to catch people up. After these replays and stuff, these things are going to be available for people to watch the recording forever. There just won't be like a live Q&A. So we can still get people caught up if you missed an episode or something like that. I want to open the floor real quick to see if there's anybody who has any questions on anything we've discussed, or anything I did not cover. Oh, I did good. I talked a lot. Okay, I think I covered all the things. This is, I'm going to bring this to a close then. If you didn't find your mute button in time, send me a message afterward, and we'll chat some more. You guys can PM me all the time. I always tell everybody a PM is going to get me quickest. Email, I check at like 2 in the morning once everybody's gone to sleep. So that's going to be like a later thing. You can text me also, and you're never going to hear from me in the morning. So just know that. And I'm going to put some slides up to tell you about what we're going to do next week and what some of the things are that we're going to discuss next week. So I am going to come share my screen real quick like and show you guys what next week is going to be. There it is. So this is some of the stuff we're going to talk about next week. Some of it's going to be a little bit of a repeat from this week, but we're going to go more in depth with things specifically for business owners. So come on over for that one if you are interested in that, and send me a message if you guys have any questions. Thanks for coming, you guys, and for wanting all the knowledge and for wanting to know all the things. If you have people who are still scared about taxes, bring them to the free seminar. That's like the best way to learn stuff, right? You can like bring a beverage, even if it's not St. Patty's Day, it's fine. Nobody will know. So thanks for coming. Thank you to Life's Faire and RC for making this happen. And just want to shout out to everybody, if there are people that you know that are struggling right now because of Oak Grove cancellations or anything else that's going on right now, people, unemployment who got stopped in December and things like that, please send them to rcef.org, rceaf.org. You can click need assistance right on the main page if you need help. So let your friends know who are struggling out there. And thank you guys for coming tonight. Hopefully I will see you next week or the week after. And otherwise, maybe one day I'll get to see your faces in person again. So I'm hoping. Thank you guys so much for coming tonight. Have a good night.